I would, though, like to start with the stock of the day. In the smaller end of the market, it is Smartgroup, SIQ. I picked it because it's one of the best performers on the day. It's up by 10%. And look, guys, this is a company that TPG and Potential Capital, it was going to be taken over by private equity. And then essentially private equity walked away. But this is clearly a pretty strong half coming through this morning and declaring nearly 50 cents in dividends. They've seen an improvement in novated leasing vehicle orders, although it is, again, one of those companies that is offering commentary on supply chains. And, a little bit uncertain coming from the CEO as to when those bottlenecks might ease in a significant way. Claude, Smartgroup, what is your assessment?
So I think that there's a few key things to keep in mind about Smartgroup. I guess the most important and first one would be that this is more of, I guess, a value play or a dividend stock. And of course, many people have owned shares in it in the hope that it will get taken over for a premium. And, you just mentioned how that's played out recently, which led to the share price dropping down. And now it's actually declared a special dividend, pretty strong results. I think analyst forecast had about 44 cents per share in earnings, and these guys came through with 45 cents per share, so slightly ahead of that. But then also, returning capital via a special dividend, plus their normal dividends, pretty good. And so I think that, that's probably helped drive the share price up today because, in this environment where the growth stocks are selling off due to inflation fears, a company that's paying out a lot of cash now today in the form of dividends, becomes relatively more valuable, really. So I think it's probably in the right spot for more conservative investing, which is, I think, probably likely to do better in the near term anyway. But having said that, the organic growth over the last few years has been pretty minimal, if any. So you wouldn't call it a growth stock for maybe a young, super long-term, high-risk investor, but I definitely think that these results are consistent with it as a steady earner, plenty of cash flow, increasing dividends. Although I do note that one of them is a special dividend, so that might not get repeated into the future. Basically, they have been impacted somewhat, as you mentioned, by supply chains because some of the people that want to get novated leases for new cars through Smartgroup haven't actually been able to take delivery of their cars yet due to supply chain holdups. So, I don't think that's a long-term big problem for the company. It just means that it's probably pushed a little bit of revenue out of this half into the next half, and that might continue to happen until supply chains ease. But overall, I'd actually say the inflationary environment isn't too bad for these guys either because it pushes up the price of used cars, which makes it more likely, so I'm told, as I understand it, that people will actually just then get a new lease by selling their old car because it's actually retained its value, and then they'll get a new lease. So that's probably good for these guys as well.
So what is it, a buy, hold, or sell?
I think for the dividend style investor who's more a value style investor, I'd actually probably say call it a buy. I'm always reticent to buy a stock on the day it's up 8-10%. But yeah, I think this is one of the higher quality ones, and I've considered buying it a bunch of times when I've been looking for that kind of play. I think it's probably trading. Sorry? I was going to say, I think it's probably still going to yield quite a good dividends into the years. The one big risk, of course, is that there's a law change like Labor proposed a few years ago, which could really destroy its business. And that's probably the reason why it's cheap. So you'd be taking the bet that they don't try and change fringe benefit tax.
So policy risk, regulatory risk, but is it worth the investment?
Yeah, look, I think this is the problem when Claude and I come on. We think very similar because that's my takeaway as well. For the right investor, if you are more dividend focused and value focused, Smartgroup is something you can definitely buy today. I actually know this stock quite well. In a former life, I was a mid-cap manager and I used to own Smartgroup. When I looked at the result today, it's the exact result I expect from Smartgroup. It's sort of low mid single digit revenue growth, some control over their costs, you get some margin growth and sort of high single digit profit growth. It's never going to shoot the lights out, but that's, I think, what you can expect moving forward. The current CEO is the former CFO. You can tell an accountant's running this business, just the way that it's managed. They're very conservative, very focused on the long term. It's probably a double-edged sword because I think they are conservative and they will give you that steady growth, but this is an industry that you think back sort of 5 odd years ago when Macmillan Shakespeare, Smartgroup and SG Fleet performed really well. it was the roll-up of the small acquisitions, and they're largely done. So the only M&A left in the space is the big stuff. Eclipse is sitting there as a potential takeover. They've sort of positioned themselves, and McMillan Shakespeare had a go at them a while back. SG Fleet made a big acquisition of Lease Plan, I think, last year. I don't think Smartgroup, I don't think they'll take on the big risk of an acquisition. So this is the sort of business you're buying, but I think that's fine. It's very capital light, spits out a ton of cash. I agree with Claude. The dividend, there's some obviously a special dividend in there, but this is a business. I think you'll see more of them in the future because if they don't make acquisitions, the cash builds up on the balance sheet, and you've got a CEO who will give it back to shareholders. So, for me, about 14 times earnings, 9% dividend yield. Like I said, admittedly, some specials in there. I think for the right investor, it's a buy.
That's a buy. I felt a buy coming. I did. All right, that's going in the portfolio.